Ladies and gentlemen, good day and welcome to the Punjab Chemicals and Crop Protection Limited Q3 FY22 results conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manish Mahawar from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Inba. On behalf of Antique Stock Broking, I would like to welcome all the participants on the call of Punjab Chemicals and Crop Protection. From the management, we have Mr. Shailesh Shroff, Managing Director, Mr. Vinod Gupta, CEO, Mr. Sriram Swaminathan, CFO on the call. Without further ado, I would like to hand over the call to Mr. Shroff for opening remarks, post which we will open the floor for Q&A. Thank you, and over to you, Mr. Shroff.
Thanks, Manish. First of all, thank you so much, everybody, for taking your time, and a very happy New Year. Hope you all are safe and good. As you know that Punjab Chemical, our major concentration is to supply products to big multinational companies. For the year, we have done, for the quarter, the third quarter, we have done sales of around 670 crores. And I think the presentation has already been sent to you. Just to give you a little bit outlook at the business has been strong. The requirement from our global customers has been steady. There have been few challenges, but our procurement team has been very good in ensuring timely raw material coming to our plants, and the manufacturing has been good to ensure that the product is delivered in time and in good quality. Going ahead, as you see, the world is changing. Things are getting more challenging, but we believe that going forward, we have been well covered in terms of our raw materials. As already mentioned to you, that the supply and the discussion with our customers has been very good. There have been good opportunities which are coming our way, and we are working closely with these customers to ensure that in the coming few years, we do these products and deliver to them in time. So I think at this stage, we are ready to take your questions and take it forward. Thanks once again for all your time. And Manish, we can then start the Q&A.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Samarth Singh from TPF Capital. Please go ahead.
Good morning. Thank you for the opportunity. Please, could you give an update on the 3 new contracts that we are supposed to have started this year, which is the Nippon Kayaku, the Singapore-based grass herbicide, and I think a domestic contract as well.
Yeah, so thanks for your question. Let's take first with the Nippon Kayaku. As you know that we had signed this contract in December 2020, and initially we had some teething problems as there was the second wave, but fortunately our team and the people at the plant, our raw material suppliers worked with us, and we did start the production. As on date, we are close to around 55 to 60% of the production. Things are going pretty well. And during the last quarter and coming towards the financial year of next year, we believe we'll be in full gear of making this product and supplying. We have already supplied the product to them. They are very satisfied with the quality and the product which they have already taken into their formulation plants, and we believe that this product has a good potential and to take it forward. As far as the Singapore-based companies, as you know that the major markets are Europe and Australia. Australia has been a little difficult because of the drought and certain situations. Having said that, this product also we have supplied good quantity in hundreds of tons, and moving forward also we believe that we'll be able to achieve the target which we have planned, which is close to between 500 to 600 tons. Eventually our plan was to do 1,000 tons, but we are working closely with customers, also working with our European partners to ensure that during the last quarter and the financial year of next year, we should achieve what we have planned. Thanks.
And there was a domestic contract as well, right?
Yeah, domestically also we have been pretty aggressive. Already we have started 2 products. As these are under secrecy agreements, so we'll not be able to disclose the name. But as stated, from last year to this year, our domestic presence is going to go up substantially, and you will see next year will also go very high in terms of supply to many of the formulation companies. We are already discussing on 2 more projects, which we hopefully should do the production beginning of the second quarter of next year.
And for FY 2024, the Nippon Kayaku and the Singapore contract together would contribute about 100 crores in revenue. Is that right?
A little bit more, should be between 130 to 150 CR.
Okay. And today we are at about 900 crores of top line, and I think we've said in the next 2 years we will get to about 1,500. So that 600 crore of delta, I think 200 crores will probably come out of metconazole and 150 crores from these 2 new contracts. Is that correct? And then the balance 250, where do we see that coming from?
So basically, as you see that for the 9 months, we have already clocked in 670, which was our last year sales. So we have another quarter to go. So we are pretty hopeful that we should end at a good number, should be around 900. Moving forward, as rightly you stated that our plan is, the roadmap is well established in terms of the product with the existing product as well as the new which will come in. So that's where we plan that even next year we envisage another anywhere between 200 to 250 crores worth of new products which would add to the top line.
Okay, thanks. And my last question, I think we were installing a HH refinement plant. Has that been installed, and have you started seeing the benefits of that in margins already?
Yeah, so basically hydrogen hydride is one of our basic raw materials. As you know, we buy from Japan as well as Europe. Having said that, with supply chain, we always try and see that the raw materials are closer to us. So yes, we have already started this exercise, and we are pretty successful in delivering within our premises, and it's been we have also commercialized the production, and we have used it, so the quality issue is also taken care, and everything is as planned.
That's it from my side. Thank you.
Thank you. A reminder to our participants, if you wish to ask a question, you may enter star and 1 on your touchtone telephone. Our next question is from the line of Manish Mahawar from Antique Stock Broking. Please go ahead.
Yeah, sure. Yes, I have just 2-3 questions I wanted to ask about. For the particular this quarter, can you possible to share what is the volume or a pricing growth in terms of overall revenue?
So basically, as you know, that our close to around 60 to 65% of our contract with the customers as well as MNC is, where we have an auto check on raw material. So that's passed automatically every quarter. As same goes with the freight, because as you know that the freights have been pretty erratic, maybe starting 2020 and then a little bit in 21. Having said that, for the last couple of months, maybe between 4 to 6 months, there has been a correction. But whatever in terms of raw material, whatever in terms of freight is automatically taken care in terms of pricing auto check. As far as the margins and other expenses, we do it on a yearly, so that we would again discuss with our customers somewhere now, which will happen between the next 2 months. And we believe keeping the spirit of the agreement, which we have done for last many years, they would continue doing the same. Yeah.
Okay. And in terms of if I look at this quarter revenue, right, the new or 2 or 3 products which we have commercialized, what was the contribution in terms of a revenue contribution in this particular quarter?
So as far as the products which we had planned during 21 and then what has flown in the quarter 3, the 2 products have contributed close to, I think, should be around 20% in terms of the sales. And as I already told you that there is a price mechanism which is in place, so automatically that has been reflecting on the performance of the company. Yeah.
Okay. And in terms of the gross margins, because what I understood, these 2 or 3 products which we have commercialized are a better margin products as compared to the earlier product profile, right? Despite that, I think the gross margin has been seen as a pressure, or I would say decline on for a company as a whole on a YY basis. So just it's more of a raw mat, or do you think that it's more of a product mix also?
Actually, Manish, this is more of a product mix, and basically, if you look at it, even the contract manufacturing segment, we pass on the exactly the raw material cost. So my sales and raw material remains constant. So that also reduces our percentage terms. So these 2 things put together have reduced our overall gross margin and EBITDA to a certain level.
Okay. But going forward, I think what you indicated for a long-term EBITDA margin guidance will remain same, right? If we move towards maybe 16, 17 or maybe 17 to 18% over maybe 24 months perspective, right?
Yeah, 24 months perspective, definitely it should increase, from the current level.
Okay. And last question, in terms of a capex, right? I think that we are expected to commercialize 2 new projects in the next year. So whatever guidance we have given, I think we have given a 150 or for capex for existing order book, right? So this for 2 projects, we will the capex will be over and above this 150, or this is included in this?
This 150 is additional for the new project what we are planning for the next couple of years.
Okay, so that is over and above this 150 or so, right?
Yeah.
Okay, sure. So thanks. That's on my side.
Thank you, Manish.
Thank you. Our next question is a follow-up from the line of Samar Singh from TPF Capital. Please go ahead.
Just one clarification on this capex. Is the 150 is the total capex, out of which 50% would be by us and balanced by the customer? Is that right?
Yeah. So generally, whenever we sign contracts, we also bring in the customer on board. The advantage happens is that they also become part of the project, which of course, I mean, whenever we have signed, obviously it's a long term, but yes, to answer your question, we do that.
Okay. And could you just tell me what the top 5 molecules for us, and what are the revenues per molecule?
So our basically, our major, I would say 70% of our sales is agrochemicals. So it's distributed between herbicide and fungicide, and that's the way we work with the product portfolio. Even having said that, we are also working on a certain intermediate, which also in the next 2 years would bring in a good percentage of business. I think it's best to, once, because we plan to commercialize this in the second quarter of next year. So once we have this, because please understand, any intermediates which we supply to either agro or pharma, they need to go through a process of checking, doing the trial batches. So in one of them, we are already have started that, and we believe moving forward, these both will be commercialized as planned.
Okay, I'll ask the question in a different way. I believe metconazole and metametron were 40% of our top line in FY20. So, would that percentage still hold? Has that come down? Please just give some clarity on that.
I think to the existing products which you just mentioned, yeah, they could be up of anywhere between 5 to 15%. But as far as the Japanese contract on metconazole, you will see better numbers during the financial year next year, as we are going to enhance the production towards one of the. There are two products which we produce for the Japanese customer. One is metconazole and the other is an intermediate. So on the intermediate side, there would be a 100% jump in terms of revenue and in terms of sales.
And our presentation talks about having a 1,500 crore order book. So what is the timeline for delivery of this amount?
So basically, this is the contract which we already signed with the most of the customers. And how we have worked out is basically some of the contracts is getting expired in, let's say, 2 or 3 years time. So we are taken up to that level, and all the new contracts which are up to 5 years level, we are taken at that level. And this doesn't mean that at the end of the expiry of the 3 years, we will not continue to manufacture. This is an automatic renewal process which we have with the customers. But what we have taken in the order book is only those live contracts.
And just to add to Sriram, that we have already a road plan. So as you know that for December we have already done what we had done last year, and moving forward we have a quarter to go, and we believe in the next 2 years, as we have said, we will be achieving what we have said, that would be between 1,400-1,500 crores in terms of revenue.
Okay. And on the the industrial chemicals and specialty chemicals, could you just talk about that business a little bit, please? Yeah,
so the specialty chemicals, I just talked to you about some intermediates which we are going to do. As far as the phosphorus chemistry, which you know that our customers are very strong, that is Coca-Cola, Pepsi, and then we have the pharma giants in India and overseas. So this year also we have a good roadmap towards this business portfolio. As I told you that this business portfolio can go as high as 250 crores in sales. This year we have done very good. We should be closing anywhere compared to last year almost double for this financial year. And next year we envisage, with the discussion which we had with our export customers, there should be an increase of at least 25% in terms of sales and business with the industrial division products. Yeah.
So this was the industrial division products was I think 50 crore turnover last year. Is that right?
No. Last year our turnover towards this was close to around 45 crores. With this year we should do between 75 to 80, which I said double. And moving forward would be a jump of 25 to 30% for the next financial year.
And when you say industrial chemicals, you're talking about both the phosphorus and the specialty, or just the phosphoric?
It's just industrial. So our portfolio is into 3. What we have is agrochemicals, AI we call it. Then we have the intermediate specialty chemicals, and then we have industrial. So in industrial division we have the phosphorus various derivatives which we manufacture, and the existing products like oxalic acid, diethyl oxalate, various oxalates, etc.
And how large is our intermediate business?
Our intermediate business, which combines a little bit of API, so this year we should do close to around 130 to 140 crore sales for this financial year. Moving forward, as I said, we are working very seriously, and we are pretty sure to have at least a 25% increase in terms of sales, for the next financial year.
And any one large particular molecule in this?
Unfortunately, I cannot give you the names, because it's intermediates which we are discussing with good customers like Mylan, like Laurus, like Divi. So that's where we are already in touch with them. They have appreciated and shown their concern because this product is an import substitute. And at this level, we are very confident. The trials, etc., are going very well. And we are pretty confident that this would definitely come in for the next financial year in terms of revenue and sales.
Okay, so but just in terms of granularity of revenue, this would be one product, one molecule.
So if we say next year, clocking in from quarter 2, we can look at sales growth between 25 to 30 crores. Yeah.
Excuse me, Mr. Singh. May we request you to return to the queue? There are several participants waiting.
Sure. This is one last follow-up on this. So this growth will be coming from one molecule. That's what I want to understand.
That's right.
Okay.
Obviously, the volume towards is very high, but we envisage because of the production, as I said, will be starting only in quarter 2. So by the time we gear up the production, but full potential for this product is close to 100 CR.
Thank you.
Thank you. Our next question is from the line of Akshay Satija from Alpha Invesco. Please go ahead.
Hi. Thank you for the opportunity. So I just wanted to when can we see 40% gross margins on a consistent basis? And
sorry to interrupt. Mr. Satija, there is some disturbance that's coming in from your line. If you're on a hands-free mode, please switch it to handset and speak.
Yeah. Am I audible now?
Yes, and please repeat your question. Thank you.
So I just wanted to check from when can we actually consistently start generating 40% of gross margins, and can these gross margins go up to like 42, 43% when all these Japanese contracts and the new products come in?
Yeah, so the product mix moving forward in the next 2 years, that's where our target is, close to between 12 to 18 months as the product comes in. Because please understand, every product we also need to take registration. So the newer ones, we have already started the exercise, and we believe during next year we should do close to around 25 to 30% of that new product in terms of sales. And for I would say post 23, we should be where which we have planned should be between 41 to 42%.
Okay. That's too much. Thank you.
Thank you. We'll take a next question from the line of Jayesh Shah from OHM Portfolio Equity Research. Please go ahead.
Hi. Thanks for the opportunity. I wasn't very clear on the top line and the order book. So with 1,500 crore of order book, which you define as live and which is over 2 to 3 years, and if I look at next year and say FY24 target of 1,500 crore, how much of this target is actually backed by the order book?
So when we have given you when we have stated that in the next 2 years will be 1,500, so that order book and the contracts are already in place. And as you have seen for this 9 months, we have clocked in for the full financial year which we did last year. And as already stated that we have another quarter to go. So moving forward, we are pretty confident that what we have planned and achieved, we will do it, because right from the customer to our production plan, everything is well organized and well set to have this target achieved.
Okay, so because of auto renewal, what you mean to say is that you have complete visibility of 100% order book. There may be a little bit of supply disruption here, but basically your full year target is backed by total order book. Yeah, so as you're right, because I mean, we don't foresee that the virus or there should be anything up the sleeve. But at this stage, yes, absolutely right. We're very clear. Everything is defined, signed, sealed, and it will be delivered. Thank you. And just on capex, again a bit more confusion. 150 crore is jointly with the client, so with the customer. So 75 crore is your portion, and there is another 75 crore of capex for next year. Is that right?
Yes, that is what is planned.
Okay, thank you very much.
Thank you. Our next question is from the line of Alisha Mahavla from Envision Capital. Please go ahead.
Hi, sir. Good morning, and thank you for taking my questions. I just wanted a little clarification.
Anisha, can you talk a little louder, please?
Sure. Is this audible?
Yeah, that's better.
Yeah. I was saying that just wanted some clarification because we stated 2-3 avenues that will drive growth, say, for next year or next 2 years. Just wanted to understand. So one is obviously the 2 contracts that we have commercialized during the year, which is Nippon Kayako and the Singapore client. Both of these you're saying have already started contributing in this year, but you'll see full potential of that in next year. This is the first lever. The second is the intermediates for which you're talking to the likes of DV's logistics sector, which you are saying will commercialize from Q2 of next year. This will be part of the intermediate/specialty chemical business. And the third is the Japanese contract, which will start in Q2 of next year. There's no overlap between these 3, right? These are 3 individual contracts that we're talking about, which will all start contributing fully from next year.
Absolutely right.
And this will also lead to margin improvement is what we're talking about.
Yeah, as I said, the product mix would come in, which would definitely be what our plan is to do this, yeah.
And for this, for now, we don't need to do any capex. For these
there would be a marginal which would come in from the original capex plan, but having said that, for the 2 products, already things have been done. And everything is production has been commercialized. There's been a little delay because of the raw material coming in, and also the potential for the Nippon Kayako. We are also exploring other markets of registration, which our Japanese customers are pretty confident which should come in during this financial year. So the benefits for us to have the product, the production is already planned, so have the product to those different markets also will be start rolling out, yeah.
Sure. And just lastly, the capex that we're saying of 150 crores, of which we will incur 50% and the customer will incur 50%, by when are we expecting this to come on stream, and what is the revenue potential for the molecules that we will make from this 150 crore capex that will be jointly done?
So this capex, as we said, that we have already partly close to around 30% we have already spent. Moving forward in terms of rebottling and then obviously having the new vessels, reactors coming into the plant. And during the next 2 years, we'll have further to enhance the capacity of these products. Yeah.
Sorry, I didn't understand. So this capex that we're doing, like you said, 30% is done, and over the next 2 years we'll do some more. When are we expecting this to start?
In the next 2 years.
Okay, sure. And just wanted to understand that, like you mentioned that because our prices are reset quarterly, and that is why we're also seeing some amount of jump up in our quarterly run rate, but this will be a more maintainable quarterly run rate going forward, even if the prices for some reason were to contract, or we will see substantial dip in revenues then.
I mean, raw material prices, as you know, we work very closely with all our suppliers, and having said that, we believe that the price correction has come in, but dramatically we don't believe that the prices would go back where we were during 18-19, and that's where we have done our risk assessment as well as discussion with our key suppliers, and they believe very confident to ensure that there is no interruption and there is not much leverage or price difference in terms of moving it forward in the next, at least for the 22-23, yeah.
Okay, thank you, sir.
Thank you. Before we take our next question, we would like to remind participants to ask a question. You may enter star and 1. The next question is from the line of Rohit Ori from Progressive Shares. Please go ahead.
Hi, Shalish, Sriram and Vinod. Sir, 2 questions. First one is with the issues related to the contingent liabilities, have you been able to sort that, or will it be a spillover to the next financial year?
Yeah, this has been predominantly sorted out, and by the end of March, we are expecting, will completely go off my books.
Okay. So my second question is, looking at the order book, do you think that you should be upgrading it to around 2,000 odd crore with a vision of 3-4 years? Do you think that the board has actually chalked it out?
Yeah, so basically, as I did mention during the second quarter, that our next phase of plan is already, we are doing that. Where right now from 1,500, where do we go? Do we go 2,500, 3,500? So the road mapping and the business plan is already been prepared. So I believe during the first quarter or maybe by second quarter, we should be able to give you a little more clarity on it. But by and large, to be very clear, there is a strong demand. Lot of customers have come to us, a few things which have been already signed, sealed, and we just needed to tabulate it and put it in. So we're pretty sure during the first or the second quarter of next financial year, we'll come back with our phase 2.
Okay, sir. Thank you. Thanks a lot. That helps.
Thank you. Our next question is from the line of Sanjay Satpathy from Ampersand. Please go ahead.
Yeah, hi sir. Congratulations for a fantastic set of results, and also the optimism that you're talking about in terms of long-term growth plan. Can I just ask while you have been very positive about your revenue growth plan, you are not really investing much on your supply side. So are you looking for some kind of asset-light model that you are so confident that you don't have to really spend upfront on capacity and still get the revenue in place?
So I think 2 is like a product mix. The existing products, which we were doing X and we did X plus. So obviously there is some debottling which goes inside. As far as the newer projects like which we did for the Japanese and the Southeast Asian customers, so we have already spent that money. Fortunately, we have been pretty good because our asset towards ratio is being well maintained, and we believe moving forward also we would like to do that. But please understand that every product, every chemical which we make go through various stages. So there are products which are 3-stage, 5-stage, 7-stage. You also have to look at the product, whether they're hazardous, non-hazardous, what are the measures which we need to take. So it's very important because for any customer, why they like to come to Punjab is because they know that we are steady in terms of our supply and the customer range which we have, which really helps. So moving forward, we believe we will try and maintain the same to take that. Is that what you were asking, or was there something on raw material? Because your voice was a little cracking, so I couldn't understand, but I hope I have tried to answer what you had asked.
Yeah, actually, what I really want to understand that what we see in the industry, there are a lot of companies, they either go through this process of getting a big order and then set up the factory, or there are some companies which are setting up a big factory and then getting the order. And it looks like you fall into the first category of getting the contract and then setting up the factory.
So what I'll tell you that both our plants, in setting up the factory means what? I mean, it's basically the production part. In terms of our utility, in terms of our energy, that is what we already have in place. So when we have planned that today we want to achieve the 1500, so we have that in place. What we need is to just bring in a few reactors, centrifuges, nut filters, etc., to do that. So there are three parts. So once when we discuss on the product, where we agree, we form the contract, we agree on the pricing mechanism. Based on that, there is phase 2 where we then start ordering these equipment. Partly in terms of utilities are already at the plant. We already have that, so we maybe need to tweak a little bit, but that's not a big challenge. The bigger challenge is to ensure safety, because with the COVID situation, to ensure which the Japanese contract could have delivered close to 70 to 80% of the revenue only in this financial year, but because of the second wave, there was a little bit delay. So taking this part, phase 2, as I said, to ensuring that the suppliers from a glass-lined reactor to SS reactors come in time, taking precaution to ensure everything goes well. So based on that, we usually, once we, and also moving forward, I would like to add that, we have a vision that we know in the next 2 years, these are the products, these are the contracts which are in place. So our procurement team already starts working on it. So maybe there is a delay because of a situation which is beyond the control of the supplier and us. But by and large, I would say we were at between 50 to 60% during 2020. we are almost now at 70 to 80%, and we hopefully, I think the way things are moving, the graph towards the virus and everything is cooling off in India. So we believe we should, moving forward, go to close to 90%, yeah, in terms of our target.
Understood. And the last question that I just wanted to understand that, like you said that you are going in phase 1 and you will be looking at phase 2. So will there be some kind of softness in your revenue momentum during this transition, or you have enough on your plate to continue a decent set of growth even during this transition?
Yeah, so the roadmap towards where we want to achieve in the next 2 years is very clear, it's well defined, and we are very confident that we will do that. I'm talking about there are some projects which would come beyond, which, as I said, where is Punjab looking today? We are at 670, we want to go to 1500. Beyond that, what is the plan? So that we will roll out, as I said, during the first or the maximum second quarter of next year, where we'll give more visibility to our shareholders, to our people, that how do we plan to take this company to 3,000 plus.
Thanks a lot, sir.
Thank you. Our next question is from the line of Neha Raichura from Taurus Mutual Fund. Please go ahead.
Hi, sir. Thank you for taking my question. My question is with respect to if you could elaborate on the roadmap for a slightly longer vision. So say for the next 3 to 5 years, I mean, where do we see ourselves with respect to the order book growth, or say the number of product launches that we'd like to have? So if you can just share your views or the vision that we have for the order book and the product launches and the client base that we'd like to have.
So Neha, you have asked 2-3 questions, but I'll just try and reply you. One is that, as I already told you, that the roadmap towards where we want to achieve in the next 2 years is very clear, and we are on target in terms of product, in terms of production, in terms of contracts, in terms with the customers. As far as taking beyond that, as I already did tell you, that we would roll in that today we are at 670, we want to go to 1500. Where do we look at the vision between 2,500 to 3,000, where we want to take the company, or beyond that? So that we would roll out during the financial year of the first or the second quarter. So at that time we would come back. But I would just like to add that we are already in process of doing that. Close to 60% of the work is being done. Also, please understand, in agrochemicals, whenever we do a contract, it's also very important for getting registration. So Punjab, as a manufacturing base, in their registration package, where they do it within Europe, Latin America, US, Southeast Asia, wherever, they need to register our name, our impurity profile. So that's also in progress. So as I mentioned to you and mentioned to all, that during the financial year of first or the second quarter, we would roll in where do we look beyond 1500. Yeah.
Okay. Okay, sir. Thank you.
Thank you. Any participant who wishes to ask a question may enter star and 1. Our next question is from the line of Karthikeyan from Suyash Advisors. Please go ahead.
Yeah, good morning, sir. Thanks for the opportunity. 3 questions. One is on the phosphorus chemistry side. Are there any of the non-traditional applications that you are looking at? Because you are among the fewer manufacturers of high purity phosphoric acid, so I'm just curious.
So phosphoric acid, what we manufacture is the high purity, that is the food grade, 85%, and then we have the 88, 89%. So the basic clientage, we are not, the normal GACL grade, the technical grade. Not saying that we don't sell, we also sell some of the technical grade, but by and large, 60 to 70% is this higher grade, where we have customers in the pharma and in the beverage industry. As I think somebody had asked me a question, and which we said that we are already started our exports, which obviously everybody can know through statistics. We have already started our exports to these beverages company outside India, other than India, which we used to supply to Pepsi and Coca-Cola in India. We've already started supplying to the plants in Thailand, to the plants in Korea. We are already talking to the plants in Swaziland. So overall, these beverage companies have been with Punjab for the last more than 20 years. They know the quality of the product is very good. They rely on us. Only the change has come in because of the China factor. So they believe, and that's what I spoke to the global lady who sits in Iceland, which is of course a wonderful place. She's been calling me there, and I wish once the situation improves, I can go and meet her. But she's pretty confident that close to their total procurement, what they do, they would increase, which used to be between 2 to 3% to go to between 15 to 20% in the next 2 years. Yeah.
Very interesting. But what I meant was, while this answer is very, very helpful, what I meant was, would there be any, I'm being very specific, battery applications which you are looking at for this? Have you done any work on that side? That is really where I was coming from.
Yeah, so, these phosphoric acid, they are used in pharma companies. Now, generally what happens is, they give us a specification, and based on that, if it's an 88%, 89%, which we do. Application-wise, I'm very sorry. I mean, we don't like to, or the customers don't like us asking them too many questions. Only what we try and do is that, for example, if they're using this product, and if still to make the final API, they still have maybe three or four stages to achieve that. Maybe we can add value by saying that, okay, we can take this product and add another product to make that. Like, I'll give you an example. We produced an auxiliary, which we used to supply to a European company, and we have been discussing with them over many years. And finally, I did mention in one of my calls that, finally we have discussed with them, and they use this application at that first stage, and before they do the final product, it is almost fourth stage. So we believe that we have been able to convince them. We are already in terms of negotiation in where we could not only give this first stage, but go to the second or third stage, which will not only add revenue, but also add a better margin towards that product which we are selling. Yeah.
Interesting. So the next question, sir, is in terms of balance sheet, how it shapes up. Two things. One is, of course, if there can be greater clarity on what would be the annual capex outflow from your balance sheet versus what comes from the client side as advance. That would be useful. And secondly, also, how does your working capital evolve or is evolving? So some thoughts on both these points.
Yeah, so the balance sheet is concerned, whether it comes from the customer or ours, it gets added to the balance sheet because that's our capital, our capital plan. That is only funded by the customer. And
but the cash outflow from your side would be helpful in terms of understanding how the balance sheet shapes up. So therefore,
yeah, we are looking at this is a plan based on the customers. Sometimes it's 50%, sometimes it's less or slightly more. So it all depends on the contract. And as far as the net working capital is concerned, yes, it will. We have been fortunate to work at a almost very negative net working capital, but going forward that will go up because our business is substantially increasing.
Correct. So I'm sorry, I'll be specific. So for FY22, what would the capex outflow from your balance sheet be? And 23 and 24, roughly, what could the numbers look like?
So we are looking at totally 150 crores over a period of next 2 to 3 years. And
yeah, so to answer your question, during this financial year, that's 21-22, we would be spending close to around 15 to 20 CR in terms of the contribution which would come from Punjab, and close to around 15 to 20 crores would come from the customer. And moving forward, as Sriram mentioned, that it depends on the product and the customer. So moving forward in the next 2 years, we envisage anyway would be close to around 50% spent by the company, which would come from internal cash flows, and maybe we are working on a plan which will come back to you, and the balance would come from the customer. Yeah.
Right. Yes, you almost touched upon it. I was wondering if you would require any external funding, either in the form of equity or further debt. Therefore, I was emphasizing on this point.
That's what we said, that the phase. We have a clear plan where we need to go, and as I said that during the Q1, Q2, we would come back with more clarity. As I said, more than 60% of the work has been done. We're just trying to finalize it, and we'll be more than happy to share with you as and when it's ready. That's during the first or the second quarter of next year. Yeah?
Sure, sure. One last question, sir, it's more a business structure thing. When you look at the inputs you gave in the early part of the conversation, there are two products, which is metaconazole and metamicron, which contribute maybe 1/3 of the revenues or more. Then you'll have one more intermediate coming up, which has the potential to be a 100 crore product. I hope I heard that correctly. So how do you balance between growing and not being too concentrated? How do you manage that risk? And how, can you share some thoughts on whether you think of it as a risk or not? Thank you.
No, so you're right and that's where has been on our agenda that, dependability on one or two products is not very healthy, and which you will see during the next 2 years that the product mix would come in. By and large, the growth would come in from the ag sector. So, for example, leaving these two products aside, you look at the product which we would do for Nippon Kayaku and the Southeast Asian customer, which would definitely next year would break that balance, would then get distributed between 4 to 5 products. And moving forward between next year and 24, the intermediates and the specialty chemical products would also bring in. But as I said, that by and large, the product mix, which right now you see is between maybe 1 or 2, would then get defined between 5 to 6 products with strong backups with long-term contracts. And moving forward, depending on the product registration and all, we believe by the time we go 23 past 24, we should be in the mix of close to around 7 to 8 products in terms of agro, which would be close to, I would say, 5 to 6 products, and the balance would be specialty intermediates, which would add to the revenue and the product mix.
That's very heartening to know. Last question, sir, please indulge me. In terms of the revenue mix, now this year there's been a fairly strong shift towards the domestic. Does that have a bearing on your profitability, or are the domestic sales as profitable as the export sales?
I think, the product mix combines of two things. One is a generic product, which we usually do for the domestic market. So the margins are not that what you would get on a product which is an innovator or a contract manufacturing. But by and large, our plan is that moving forward next year, we should be in that 16, 17, and then eventually the plan is by the next 2 years, as the product mix comes in, is to go between 18 to 20%. Yeah.
Right. Fantastic. Much obliged for the clarifications and very best wishes.
Thank you. A reminder to our participants, if you wish to ask a question, you may enter star and 1. Our next question is from the line of Samarth Singh from TPS Capital. Please go ahead.
Thank you for the follow-up. How many customers do we have in the agro side and the CAM space?
So from the agro side, in terms of contract manufacturing, we are close to 4, and 2 more to be added in the next 2 years. And as far as overall portfolio in terms of agrochemicals, where we work with various customers, at the moment is 10, which we have, which includes MNCs, or I would say companies in India and overseas, spread across from Japan to Australia to Europe, Latin America, and the US. And of course, Europe.
And the 2 more that you were talking about adding, this would be Nippon and the
No, these are the new ones. That would be 1 more Japanese and 1 European customer, yeah?
Okay. So Nippon and the Singapore-based customer already part of the 4 that you mentioned.
Yeah, so they already fall in the contract. Yeah, that's what I mentioned. Correct.
All right. Thank you so much.
Thank you. Ladies and gentlemen, that was the last question. I now hand the floor back to Mr. Manish Mahawar for closing comments. Over to you, sir.
Yeah, thanks, Nimba. On behalf of Antique Stock Broking, I would like to thank the team of Punjab Chemicals for providing us an opportunity to host the call. Shailesh, would you like to make a closing comment, sir?
Yeah, of course. Thank you so much, guys, and I hope me and Sriram. Unfortunately, Vinod, the CEO, was on the flight. I don't know whether he joined in. He had to travel, but I hope me and Sriram could reply to all your questions. And thank you very much in believing us. And as already stated, Punjab, we are on the right track, and we will do our best to ensure the growth pattern to grow more. And we'll be very, very happy to share our next phase, which would come in, as I already mentioned to you, during next year, we would roll out our plan. And once again, Happy New Year, be safe, and thank you so much for your time, and goodbye.
Thank you.
Thank you.
Ladies and gentlemen, on behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.